We still have some people joining us, but given that it's a little after 1:30, let's go ahead and get started. And the rest can join, and they'll just miss my fabulous introduction. But it's welcome to the Oilfield Strong webinar for July 7th. Appreciate the attendance. As you know, we have changed it now to a monthly presentation on a fixed time. It's the first Wednesday of every month at 1:30, so that allows you to schedule things out. As you know, if you miss this or you have someone that you want to hear the speaker later, we'll have it on YouTube in a couple of days, and all of our past presentations are also on YouTube. So you'll be able to go back and listen to that. So just go YouTube and then look or pull up OTA compression, and it'll pull you to our channel. As I've said before, it's amazing that we even have a YouTube channel. I guess that tells you how the world has changed. Well, today we have a fantastic speaker. I've known Doug for quite some time. I find him always very enjoyable, very knowledgeable. It's also on a topic that we haven't really covered, which is talking about more midstream activity. Doug has a vast amount of experience in midstream, as from engineering all the way up to management. Was a co-founder of a significant midstream company in Oklahoma, and is now actually looking at carbon sequestering and some other opportunities. So we might get into that later in the conversation. So Doug, appreciate you joining us. And I want to just start off with maybe letting you kind of couch the conversation a little bit with kind of what's happened in the midstream area. Seems like, in the last year or two, the whole energy industry has shifted around, and I'm sure that's happened to midstream. So can you kind of bring us up to speed how that's evolved?
Yeah, I won't belabor it, but I I kind of described like the turmoil really began in late 19. Activity was going sideways and down, and it felt bad, but like you, I mean, I'm an eternal optimist, and so but then in early 20 we have this Saudi Russia price war, kind of a black swan event, right? We go from $55 crude on a Friday to 40 the following to 20 that Monday, 3 days later. And then I think it's like a few weeks later we have a worldwide pandemic. So we have this double black swan, all that happened in about 30 days. We have, 30 days from that, we have massive demand destruction. You've got analysts are evaluating big MLPs on some of the parts, which is like evaluating a corpse, and we know these companies have wonderful, prospects, but then you get to where we are today, and we've got 70 something dollar crude and $3.50 nominally gas, and NGLs are frac spreads are great, and activity levels are up, and we've come out the other end, but not without a whole lot of scars.
Yeah, it definitely seems that way, but it also seems like midstream, like you said, the MLPs are kind of not quite in favor anymore. It kind of sense that all the money chasing midstream deals isn't chasing it anymore. That and is that true? And then also kind of overlay that with the bigger companies that, there for a while it just seemed like the big pipeline companies were just going to keep getting bigger and kind of squeezes out the little guy. Now, how do you see that all playing out?
I think the first thing you said, I do think there is a lot less money chasing traditional midstream businesses today. I think there's a reason. There's a reason for that, and that is, well, in some respects, any PE firm that's focused on midstream is, if they're not, they're looking at being focused on more transition things as well, not as a core 100% of their business, but maybe it's 30 to 40% of what they want to invest in going forward. But there's really just not a lot of stuff to invest in. I mean, greenfield development is, you never say never say never and always, but I mean, it's kind of dead. And so you look at M&A, and I may be jumping the gun if you had an M&A question, but M&A is anemic. The MLPs they're not buying anything, and they're not selling anything. We've had one, what I would call transformational consolidation, and it's in the HSR review, and that's Energy Transfer and Enable. But other than that, there's just, there's not much.
So why is it that companies aren't selling? We've kind of had this conversation over lunch before, but some of it has to do kind of private equity and how they manage their money, but that might be interesting for the audience to hear. Why is it that you don't think there's the product out there to be bought?
I think it's the good old bid-ask spread. I think and I don't know for sure. I have not found an actionable acquisition target, something that I'd want to own and want to try to get underwritten. But I would say that
because they're not for sale, or because they're for sale for such a high price that they don't meet your economics?
They're not for sale.
Okay, so they're just not even out there.
Yeah, if you talk, like when I talk to my buddies that are investment bankers, midstream focused M&A, they really don't have anything in the pipeline. Now, everybody's optimistic that 3 months from now or 6 months from now, we'll start to see things come to market, but there's really nothing in the market. Now, that doesn't mean you can't go knock on someone's door, right? But if you said, Doug, what would something trade at? I would go, well, number one, I don't know, because every business is unique, but I would say maybe you can underwrite something at 7 to 8 times real EBITDA. And we've been living in a world of 10 to 12 plus time. There's been 25 times deals done, forward looking EBITDA. And I think that's gone.
And so if you can underwrite it at 7 to 8, but what do you think a seller would want to, they of course would love the 25, but it sounds like they don't want the 7 or 8. They want something 10-ish.
Yeah, I would. There's a bid-ask spread for sure.
Okay. And so does that also fit with if there's less capital going in for greenfield? To me, that speaks to like private equity or institutional capital coming in to grow up a certain area, put a gathering system in or a pipeline, and then they're looking to exit. But if you don't have that money going in, or haven't for the last couple of years, there just hasn't been any kind of new codes coming around that might want to sell.
Well, I would probably say it differently, Grant.
Yeah, please.
I don't think those opportunities exist today. They certainly don't exist on any large scale. So today, money's not coming in for greenfield because there are no projects. There's a lot of private equity backed businesses that are good businesses that are, right now they're probably stuck. They're focused on, I'm an investor in one that I like a lot and I'm very proud of. And we've, it's free cash flow, it's cut cost, it's continue to be efficient and start distributing. Overall, the midstream space right now, I would say overall is great from a operating company perspective. Cash flows are up, leverage is down as a whole in the space, and growth capital is really tempered. So I think there's a lot, people are living within their means, and there's a lot of financial discipline, which is great to see. But there's been a lot of carnage.
Now, are you talking midstream, or are you talking PDP and ENP, they kind of sound the same in a way, that
Um,
talking about just kind of living on cash flow and just muddling along. And
yeah, well, I was really just speaking to midstream, but I think,
yeah, but it sounds very similar to the
yeah,
PDP or the ENP model.
when activity levels slow down and you're not spending capital and your revenues, well, you got a declining revenue stream if you're on the upstream side, but let's say you're running enough rigs to stay flat, your commodity prices are up, so your revenues are up. It's not a terrible place to be. Um, um, but private equity backed businesses have to exit, and you know the I I'm pretty confident there has not been a meaningful exit of a portfolio company since 2019,
Wow.
and there's a whole lot of them.
And so they're not getting the price they want, so they don't want to sell, but they're also getting management fees for that capital invested. So they're getting kind of paid and paying down debt. So it doesn't sound like they have any real reason to try to pursue a transaction.
I think that's a fair point, and hence the conundrum, or we're it's kind of frozen.
So even like over in, you always thought like the Delaware Basin, kind of that drilling out in that far side, that they need more pipeline over there. And I assume either they've got the pipeline now, or the drilling has dropped and it's going to need to pick back up to be able to justify uh, any more projects.
Yeah, no, I think that's a fair point. I just don't know that there's space for a new entrant. I think build out that's required for what you're talking about is being done.
Just by existing players.
Exactly. Yeah, exactly.
So if you're not already in the business, it's going to be hard to break into the business.
Right now, I think so.
Okay. What um so all this money that was in the midstream area, it just sounds like some of it went to the energy transition and then some just left the energy industry as a whole. All that money, kind of investment money or interest money, just kind of went away.
You're over my pay grade. But yes, and eh, it can be debated what's clean and what's not clean, but capital has flooded in the last. It was almost overnight. I mean, if you take these black swan events and take the lockdowns, um, and then it was like the next week, nobody wanted anything to do with us, and all the money's invested in EVs and charging systems and solar and wind and batteries and all the ancillary businesses, and I have actually studied a little bit of at least the capital markets activity, and um, it's fascinating, if not mind blowing. I mean, MLPs, and this probably isn't like the peak, but I mean, 5, 6, 8 years ago, it wouldn't be crazy to say, hey, MLP number one is valued at 15 times next year's EBITDA, right?
I think that's fair.
Well, let me tell you what some of these, uh, uh, for the businesses I just named, these new sectors that are, or subsectors that are being, followed by all the big banks. Their businesses trading at 30 to 90 times EBITDA. Hydrogen companies, and there's not a lot of them, but as a group, they're trading at 30 times revenue. And you go, well, what's their EBITDA multiple, Doug? And I said, well, they don't have one, Grant, because they have no EBITDA.
Mhm.
Uh, it,
No,
it's
it definitely has that technology or cable kind of valuation. And boy, it's hard to compete with that, isn't it?
Yes. Yeah, and I mean that's I think that's what the public guys. If you look at the Lyrian index and pick any time historically, um, that's not going to attract a lot of capital. In the last 2 years, you'd still be down at least as of maybe May is probably the last time I took a look, but um, um, you'd be down 20 to 30%, um, which over a 2-year period, that's not going to attract a lot of new capital,
No.
investors.
Well, ESG affected E&P or continues to affect it. Has it hit midstream as significantly, or partly, I would think midstream in a way because of the regulation has already kind of taken care of some of that ESG beforehand?
Yeah, I agree with that. And my experience base is being private, with private equity partners. But I do talk to friends who run, larger MLPs, and it's part of their daily lives. I personally think that the midstream space we do a lot of good as it relates to ESG, and particularly the E, which I think most people would argue is the most important. Um, um, but nevertheless, it's there's midstream guys are being pressured to do more, and really to do more means probably limit emissions. There's natural things that are pretty difficult. When you've got to pig a pipeline, you got to pig a pipeline, and I don't know how you solve that. But emissions are a focus, and I think besides just investors and probably board members, I think the big guys are getting pushed from their customers, particularly large. Think about if Exxon or Shell or Chevron is your key customer, they're pushing you to minimize your sort of carbon impact.
Yeah, it's well, there, in a way, there is a link, obviously, between midstream operation and how a E&P company can handle their ESG or their flaring. If there's availability of pipeline, if the pipeline is at a low enough pressure, there seems to be a definite link between midstream and E&P and how they both are able to perform from an ESG standpoint.
Yeah, and I mean my experience with flaring, because from time to time we'd have pads that our customers would have to flare, whether it was for hours or days, and typically that's weather related, where we've had freeze ups, or we couldn't get trucks out to pick up condensate, and we had a clog in the system, so to speak. But like the wholesale flaring that people talk about, I mean, it's really, I mean, you can say it's a midstream, it's an economic issue. You're typically talking small quantities spread over, vast terrain. And I guess I'd say this, if it were economic for a midstream company to go pick up all that flared gas, it would absolutely get picked up and not be flared. I just think you can't lay 2 miles of pipe for 50 MCF.
So what's the answer there? Because you either obviously increase gas price or subsidies, I guess, but somehow you got to, if you're really wanting to eliminate flaring, which is clearly what everyone's pushing for, how do you do that? How about that for a above your pay grade question?
Above my pay grade. Well, and this is not the right answer, but you don't produce the well. So there's one answer. That's not a good one. If if you can't do it, then you're gonna have to incentivize and pay somebody to come get it. And in a lot of cases, even if you had the total value of the hydrocarbon, you may not be able to make economics for it.
Have you heard anything like that out there on like subsidies, or because they do that for like wind power, don't they? That where they help connect that power in, but
no, I haven't, Grant, and I I would guess that with, sort of the administration we have in DC, I wouldn't think that we're going to see any incentives to help on the flaring. I think they probably would have a mindset of just shut the wells in,
Yeah,
you know, unfortunately.
I guess that eliminates all ESG if you just shut it in a way. And you don't have anything to worry about except for a lack of supply of oil that'll jack up the price. So
That's right. And everything you buy every day and turning on your lights and all those things will be
yeah.
more expensive.
So have you seen since the Biden administration took over a lot of changes in the midstream sector from a regulatory or anything that's kind of was all of that regulatory and ESG focus and all that already there?
Great question. You're making fun of me because I'm unemployed. Because when Biden took office, I was starting my between deals. So I don't know. I've seen that, some of the rollbacks on methane emissions and different things that Trump had done or put back in place. I don't know that really impacts. I don't know how big an impact that is. I don't think it impacts our business. I really haven't. I think things are coming, and I think there'll be, mid-range and long-range targets on various things. I mean, obviously you saw, and I think there's been some court cases that have overturned it, but in New Mexico is probably the worst as far as being hard hit by permitting. And I think what probably people didn't think through, if you stop issuing new permits, it's not just drilling an oil and gas well, it's getting a right-of-way crossing, it impacts all these different routine day-to-day type permits that log jams it even worse.
And no, I'd agree that what's your sense on the pipeline coming down from Canada, that them stopping that?
I think it's terrible because that crude's going to come here,
And come through pipeline or trucking?
It's pipeline as much as it can, but you'll get a lot, we don't, you'd rather have crude in a pipeline than you would on the road or on the rail from a safety perspective.
Yeah. Does seem like midstream has that going for it, that it's such a more economically and environmentally friendly way to transport than trucking or rail. But
yeah, there's definitely there's winds in your face in certain areas. I mean, we're blessed to be in Texas, right? Where people make rational decisions based off of, facts. And years ago, we had a couple of assets in Appalachia, and they're good people in Appalachia, and I really like it, but there are also some people that are misguided, and they don't want pipelines. I mean, just look, New England's freezing because New York won't let them lay a pipeline, from Appalachia up to New England. And you fight that even on small things. For sure, there's people that don't think agriculture and oil and gas can coexist. And I think we know in Texas, it probably was important for both of them to exist.
very clearly. So you mentioned transition. You want to share kind of what you're looking at and kind of why, whether it's midstream or not, and why?
Well, I am definitely evaluating carbon capture, sequestration, EOR, but really the sequestration. And I'm just trying to get smart, Grant. There's really not there's a couple of projects that have been announced that it'll be interesting to see how they commercialize them, but there hasn't been a commercialized, it's new territory, and I do believe it is a midstream. Uh, it's a midstream project, a midstream asset, and the people, that'd be the people that do it. But it's not simple. We're not.
Because the technology or because of the regulatory, the economics, all of the above?
Yeah, I'd say all the above. I think the hardest two parts, I mean, on post combustion sequestration. So that's what you would think about in at a gas plant or whatever power plant. Uh, yeah, the tax credit is complicated because no one's monetized a 45Q credit yet, to my knowledge, and I'm asking a lot of people for carbon capture, and um, way better than me, reservoirs aren't reservoirs aren't reservoirs, and so reservoir modeling and finding the right rock in the right spot, or the right saltwater seam. It's not easy. It's not simple, but I think it could be a huge, why I'm interested in it is I'm a believer in natural gas, and I think if this could have economic legs and become kind of an integral part of activity, I think it gives natural gas tremendous running room. We have decades and decades and decades of supply with current technology, and if we were able to economically, capture emissions and get them out of the atmosphere, well, I mean,
Expand on that, because natural gas is a cleaner burning fuel than oil.
right.
And so when you say carbon sequestration helps make gas even better.
Yeah, I'm just saying if you are sequestering the CO2,
Mhm.
and I'm thinking of gas streams in this example, okay, and get to refineries and the same thing, or similar for sure. Said differently, if we have a lot of supply and we're not polluting, what's it seems like our industry is pretty critical. I mean, and our industry is incredibly critical. A lot of people don't realize that, but I think our industry is pretty critical piece of the energy puzzle.
Mhm. Reason I kind of asked what you were doing also is that, you're kind of saying how money has left midstream and gone to the energy transition alternative. And in a way, here you have 20, 30 years of midstream experience, and you're not leaving midstream because there is such an overlap, but it seems like you're definitely seeing more opportunity, or just opportunity, in this alternative world. And I assume that's from a capital side, a project side, kind of all regards.
Yeah, I think so. I think it's early yet. I'm not a very patient person, but I think this is a patient time, and just trying to be smart. None of these projects will go quickly. Um, they won't. It's I used to think that if you got a couple of you had acreage dedicated and you got a couple of customers, then you signed gathering and processing agreements, and you're going to go build a new plant, a gathering system, and residue. That's pretty complicated. That's really not that complicated compared to this stuff.
Interesting. Well, very good. One last kind of question about kind of a general, you see any from I guess, trends going forward, increased carbon sequestration, can't say that word, and that activity, but anything else that you see is kind of forecasting for, you see the M&A business kind of still being kind of limping along? What kind of tell me what I'm going to see in the next year or so?
Shoot, buddy, I wish I knew. I I have to believe the M&A market's gonna come around, and but I don't know what makes it break. I mean, it could be that we need investors coming back to the space in the capital markets. That may take a bubble bursting in some other industry, or it's just they're like, hey, we understand the oil and gas business, we understand the midstream component, the upstream component, et cetera. And these guys and gals have been disciplined, and they run their businesses tight, and they distribute cash flow, and they do good things for the environment.
Kind of doing everything that they're asked to do by capital
That's right.
markets and the public. So
That's right. That's right. And I think, yeah, so that could be super helpful. But I really don't know what turns the private ones, other than price, bid ask spread, and when they meet, and it's just difficult to underwrite any growth, prospect. I mean, you're probably trying to underwrite flat activity. You know, it's tough. I wish I had something wonderful to say, but on that, I'd love it, but it's just not what we're seeing.
very good. Well, Doug, we're at our end of our 30 minutes, so I appreciate your time. I always find talking to you, like I said, very interesting, and especially because I'm not all that knowledgeable about midstream. So we see quite a few participants on here, and most of them know you, Doug, but if not, I'd say reach out to Doug and visit with him about what all he's doing. So we will have stay tuned for our next webinar. Again, the first Wednesday of each month at 1:30, and we'll be sending announcements about that. But with that, we'll come to a close. And Doug, thank you very much for the time.
You bet, Grant. Thank you, buddy.
All right, be good.